A very good afternoon to you. Now into Business Unusual. As we traditionally do every single Tuesday, we bring you Stock Market Tuesday on Business Unusual. But first, let's take a look at your top business stories of the day. Now, the GDP figures have beat expectations and are up by 3.1%, this in the second quarter. And earlier this year, the International Monetary Fund lowered South Africa's projected GDP growth rate for 2019 to 1.2%. Now, this placed the country among the worst performers in Sub-Saharan Africa. We find out what led to this economic performance in the second quarter and what we can expect going forward. Joining me in studio this afternoon is Kabelo Tola, who is Portfolio Manager at FNB Wealth and Investment, and Sfisos Kenjana. He's an economist and founder of Afra Consultants. Thank you, gentlemen, for your time this afternoon.
Thank you very much.
Perhaps let's talk about the sectors, and let's break it down, the sectors that contributed positively to the GDP in this quarter. Let's start with you.
So you saw a resurgence in mining. Mining contributed quite positively, I think adding a single basis point to the 3.1 that we saw. So that came out very, very well. We also saw finance being quite resilient during this period, adding 0.9% to the 3%. So a very good showing there. Detracting, I believe, was agriculture. And this maybe plays into the space of what the finance minister has spoken about, high labor-intensive industries that need to pick up the load.
Yeah, I mean, I think if you look specifically at some of the granularity in the numbers, and so, the primary sectors came out at 14.4, primarily driven by higher prices in iron ore. And those came on the back of floods in Western Australia. So Rio Tinto, Vale, and BHP Billiton had supply contractions that had implications for higher iron ore prices. I think to the year, iron ore prices are up 70% or so. And that's one of the reasons. The other reasons, of course, is the fact that Chinese inventories were down. And so from a mining point of view, that's, call it some of the data that lives, I think, below that. We saw, however, again, construction going into its fourth consecutive negative growth quarter. And for me, that's really the stuff that's really concerning because, again, that's the sector that is an investment conversation sector. And so when we are able to really materially invest in infrastructure, and then you start to see things that drive demand from a medium to long-term point of view, from an economic growth point of view.
And why is it that construction once again, underperforming and not contributing to the GDP as expected, specifically because infrastructure is such a main focus of the president's agenda and part of his turnaround strategy?
Yeah, I think partly to do with the industry not getting sort of the order books that they had anticipated, a lot of them having diversified into other developed markets or developed markets. So I think from 2010 leading till now, the sector's been in a serious decline. Of course, it speaks to our need to build towards sort of a sustainable infrastructure drive. But yeah, I mean, by and large, really, the whole construction sector on tenterhooks.
And let's look at the impact of utilities, water, lights, etc., on this GDP on this quarter.
I mean, it's quite interesting, right? Because we saw from the National Treasury paper around how the network industries, as they call them, would be important for sustainable medium to long-term economic growth. And we saw now an uptick, I think, of about 3.2% coming through from those sectors. And how those play two roles. One is a developmental role, which informs the social wage. The other is an economic growth and how they support other sectors to drive economic growth in the country. And so we saw a little bit of an uptick in those sectors again, and those sectors continue to be of utmost importance in terms of really how we structurally configure the economy for growth. And I think when you contextualize these numbers, and for me, it's always around, you always bring it back to the...
Please, I do apologize for cutting you right there. We certainly will continue with our conversation. As we all know, We are going to take a very quick ad break now. It is Stock Market Tuesday right here on Business Unusual. And one of the top stories that we are tracking for you today is the funeral of Gavin Watson. And as soon as that comes on, we certainly will be plugging you in there. But let's take a quick break and we'll be right back.